All right, guys, we're back. It is Tuesday, the 7th of May. Bitcoin's just been rejected at $65,000. So let's get into the analysis for today on the short term, the medium term, the long term, the traditional markets, S&P, NASDAQ, the USD, the VIX, and also some international markets to get through before I get over to the altcoins. Some altcoins are leading the charge, potentially hitting new all-time highs. So without further ado, smash up the likes. We're doing amazingly well. Thanks again for your support with the no-nonsense titles and thumbnails. Glad you're appreciating it. It's your home of macro cycle analysis, cryptos, Bitcoin, stocks, and of course the real estate cycle. All right, guys, let's dive into some data here, looking at the S&P 500 with a pretty decent hit rate of further upside. We've just seen the S&P close a second day above the 50% level. As we looked at yesterday, this was a pretty good sign. The stock markets, of course, potentially putting in that low back in April. Now, the view that we've maintained here is that this is a correction in the overall bull market. My theory here, since the lows back in 2022, we had the low in June, then the second low in October. My view is that we've been in a macro bull market for quite some time, and this is going to continue on for a lot longer. I don't see any sort of major collapse coming in 2024 or 2025 based on the data that we've presented here for the last umpteen months. So that's good stuff so far for the S&P if you are looking for higher prices. But of course, the overall health of the economy and the stock market more importantly here. This is part of the seasonal period for the S&P 500, for the stock markets, leading into that election later this year. The seasonality meaning that we've gone up to reach a top, we've got a correction, and now we're basically grinding sideways to test the supply, test the demand at the lows, and eventually get back to new all-time highs. So I'll get into Bitcoin in a moment, just looking at the potential of a new all-time high for Q2, or maybe even a red quarter, as I'll go through a little bit of the data there. But I just want to quickly run through this piece here. S&P 500 after survey stock allocations cycle from less than 45% to greater than 65%. So less than to then greater than. There's only 4 data points here. Goes back to the 90s. Every time this data point has come up, 3, 6, 9, 1, 2, 3 years, there's a 100% hit rate of higher prices for the S&P 500. Now, I'm not going to get too far ahead of ourselves. There's a lot that can happen here. There's only few data points. But the beauty about this, or what this is trying to express, is that once you cycle from deep pessimism to high optimism, it's usually not as bad as the masses think. And that's, you can see here that it's been some very deep pessimism, and then it cycled to optimism, and you had many years left in the bull market. Granted, it didn't go that much higher back in 2007, but it's still higher prices, and it's basically trying to hold in to that ride where everyone keeps saying there's a recession coming, there's downside, it's gone up too high, things are overbought. You hear that over and over and over again. It must collapse, it must collapse, it must collapse, and it just doesn't. And the point of a lot of this data is to show that bull markets can run a lot longer than many anticipate, especially after significant pullbacks. So you can see here for 2022, pretty significant pullback, and basically everyone was very, very fearful in 22 and 23. Some of them still are now, but it's a lot less now, according to the data, than what it was back then. And so many are still hoping for this correction, but it doesn't seem like it's going to come based on the data, based on cycles, because generally bull markets keep going and they go for a lot longer than people expect. And eventually the feeling of the bad times wears off, and that's when you need to start getting scared. The bad times haven't worn off yet, and the full-on good times haven't taken effect, at least from what I can see. And I think when those times happen, that's when you see a correction. Bitcoin was a perfect example of that. The bad times wore off back here. Oh, sorry, these were the bad times, and then it started to wear off as we climbed to 74,000. And like we remember back in March, or hopefully we remember 2 months ago, it was as if the good times could never end. 100K before halving. This is the best bull market of all time. We've reached new all-time highs earlier than any other cycle, etc., etc. The same old things. ETFs are here to save us. All these people are here to save Bitcoin. This thing's going to keep going up. Granted, it hasn't gone down that much, only 23.5%. But the main thing is the the emotions have died off from that point. So that's something to keep in mind. I think we still got longer to go in this cycle, further upside, but it's just an understanding of how these cycles play out. The VIX has dropped off. It's back into the bull market zone here, and it can remain in the bull market zone, or what I have coined the bull market zone, which is basically between somewhere around 11 on the reading here and about 17, and it will have spikes out of that zone when the S&P corrects. But overall, it can remain in this bull market zone for a very long time. Now, I've seen a couple of different analysts try to use this in the exact opposite way to the way I've used it. And you've got all the records of receipts if you want to go back on X and have a look or not, your call. But they've tried to say that when it drops into this zone, that you've got to be prepared for a collapse. And it's essentially the same old folks who continue to short the market all the way up. You might know who I'm talking about. And they tried to use the VIX as if to use it as a signal that the S&P was going to collapse. And that was back when the S&P was at some of its low points of 2023. So the way I see it, the VIX is back in the bull market zone. It's done it many times before. We will see spikes out. That's normal, especially because bull markets do run for many years and a lot longer than many of us can anticipate or than what we think it should run for. So let's not do too much thinking and let's just focus on what the charts are saying. Bull market's still on, signs are still looking good. And even if you see a recession as the UK has done, the market continues to go to new all-time high, new all-time high, new all-time high again. This is absolutely wild. This market just opened, must have been a few hours ago now. I could go back. But anyway, this is Tuesday. It's the UK would be early hours right now, and it's pushed to a new all-time high today. Now, this could be a reversal, sure, but we're still seeing all-time high prices above previous all-time high prices, which is how all-time high prices occur. But they've been in a technical recession. UK slipped into a recession at the end of 2023. There is some GDP data coming up this week on Friday afternoon, our time, for the UK, which might show that they're not in a recession anymore. But that's why I stress over and over again how important it is to follow the chart and not follow the news headlines and, economic analysts. Because we know, worst of all, economic analysts get it wrong 11 times out of 10. And so if we just focus on the chart, it basically gives us a lot of signals that this market was getting ready to pump to new high prices. And remember, we trade the charts. That's how we make money. We don't make money off producing economic reports for banks and whatnot, unless that's what you do for a job. Let us know in the comment section. But this chart has been on a tear, higher lows, hitting new all-time highs, coming back, test tops, and now it's just basically skyrocketed from that point, while the UK has been in a technical recession for this period here, and basically the market was getting ready to pump. Rejection at 65K that we looked at yesterday, that was a pretty clear 50% level through the middle from the top down to the bottom. So that's this one right here. If you guys are wondering what the 50% levels are, use it from key turning points, top to bottom. Now, if you want to understand this in more detail to use it for your trading, you guessed it, I'm going to get over to our TIA Premium membership here. Link is in the video description. And on top of that, if you want to get a bit of a feel for how we do things, how we analyze the markets across the board, Bitcoin, cryptos, stock markets, and of course, the real estate cycle, check out the free report that comes out weekly. That is coming out today. So make sure you subscribe to that. Link is in the top of the video description. Now, to the downside, we look at the smaller 50% move of this range now, the low to the high. That comes in at $61,000. So if this move was to fail here and go under 61, that would be invalidation of the move to the upside, and you could expect a test of lower prices. You probably end up testing somewhere between that sort of $56,000 and $59,000 level. But for now, just one day reversal. Got to see how this plays out. A break above 65, good for the bulls, bad for the bears, or breakdown from 61, good for the bears, bad for the bulls. So we wait now and see how this is going to react. The levels above are 67K, 69K, and $71,000. Stuff we looked at yesterday, so I don't need to repeat that. You can see pretty clearly how those trend lines have been formed. You want to throw on some candles. Pretty clear support and resistance through those particular levels, every roughly $2,000 to the upside. Now, the 50% level at 65K is a much more important level than the 62K was, because it makes up a longer time frame here. So you're looking at the weekly chart and a test now of 65K. The weekly chart's tops to the bottom here, slice through the middle at 50%, 65K. As we've looked at, if this is rejected, downside there to the 50% and the low is 56K. Next price down is around $49,000. Now we do have other targets in the zone here between 50 and 53. Let's not worry about that for now because there's still a bit of work that needs to be done here for the market to break down, for Bitcoin to break down from that if it breaks down. So at the moment, that's where we stand here for Bitcoin, the short term, medium term. Let's get across to the longer term here, looking at the left and right translated cycles, but more importantly, the quarterly chart. Now this quarter is not complete. It's red, but it's not complete yet. These are all the quarters we've had throughout this bull market. 2 greens, a red, 2 greens. Could it be a red? Let's wait and see. Now using this chart here, so the information that we've got from TIA indicators, this will be released, I'm hoping, in about 4 to 6 weeks. Subscribe to the free report and you will get an update when this is all released, along with our predictive cycles as well. I've taken out the bearish years, 22, 2018, 2014, and you can see for the April-June quarter, so basically quarter 2 of the year, there's only been 1 confirmed red quarter. Could we keep going green? Yes, it's possible. We've had 2 green quarters already. Now there's just over halfway to go in quarter 2 before we can get a confirmed result here, if there's going to be red or green. Each bull market has seen at least 3 red quarters. So 2017 bull market, 3 red quarters, not overly convincing in terms of that the market had to collapse. Like, they weren't really big red quarters when you look at open to close. There were significant corrections. This one here was 40% from the previous quarter to the bottom, but in terms of the loss in just that quarter, it was only 9.2%, going back 3%, and then only 10% here. So not big quarters. The only real big quarter was April, quarter 2 of 21, which was a 40% correction. You can go back to 2011, they were obviously massive ones, but far less liquidity in the markets. Bitcoin was trading in single digits. I don't lean on that as much to expect a 70 or more % correction for the quarter, because as we've seen throughout the bull markets, there's usually at least 3 red quarters there. You can see in the previous cycle, and then this cycle there were 4, but one of them was the COVID correction. So if that didn't happen and you had a higher low, just the ifs in that, you still got 3 red quarters within this bull market. So is now the time? That's yet to be decided, but some of the data is lining up that it could be a red quarter. Let's continue on, because the market would have to get above $71,300 to make this a green quarter by June 30th. Now, for the altcoins that are pressing to new highs, they're taking on fresh highs. Solana is, of course, one of those. It's broken out of the double tops. It has put in higher lows 3 weeks ago, and I suggested that we're looking at some altcoins putting in higher lows. And there were a couple of comments saying that if you used the criteria that I'm using to define leaders and laggers or strong and weak altcoins, it's a pretty difficult thing to do. And my response is, well, if it was easy, wouldn't everyone be millionaires? If it was that easy, wouldn't everyone just have a ton of money? They've put it into whatever they want. They start off with a little bit, $100, and they turn it into $1 million. That's the way I look at these markets. I think getting into crypto, everyone thinks it's so easy because we see and hear a lot of stories of people making millions. But at the end of the day, they've done something that others haven't. And in my case, the way I like to look at things is I will use certain criteria that allows me to quickly find altcoins that are going to potentially outperform other altcoins based on the strength of their chart compared to others. Of course, I could get into the weak stuff. This is all my weaker stuff down here. You guys know the deal. Not naming any names, you can read them all off here. They have failed the test for now, but I'll continue to check on them. These ones have all failed the tests that I use to determine strong and weak, which I've covered many, many times on the channel, and I'll continue to do so for you guys. So make sure you do hit the subscribe button, like the content, so we know where we are going with the algorithm here. So Solana is one of those, it's breaking past those tops here, and it has come back and almost taken back all of the losses from the 12th and 13th of April, which is a pretty significant period in this market. So remember that turning point. That's where things started to collapse from. Many found lows at that point. Bitcoin didn't, however. Bitcoin found a low on the 1st of May so far. So it's put in a lower low than some of these altcoins, which suggests some of these altcoins are going to outperform here. and we get to that big all-out alt season sometime later in 24, maybe 2025. That's the time of the market where everyone is a hero.
Land! Aha! Go for glory, like a tribe.
Another altcoin that is on that strong list that continues to meet the criteria, the higher lows, the breaking of swing tops, the breaking of 50% levels, is Render. So it's not a surprise. I've put these on the channel before for a reason, but they continue to show those signs of strength, basically outperforming the market. They're outperforming Bitcoin here. When Bitcoin had its low, these have continued to climb against BTC value, and they continue to climb against BTC value while Bitcoin also goes up, which means their US dollar pairings would go up even more than what Bitcoin is going up. So you can see Render here from the low of May 1st to where it currently is up 50%. And Bitcoin, on the other hand, from that May low to its current top is up 16%. So that's the sort of gains that you want to be seeing here. Whereas if you went to something down in this shit list, we can look at May 1st, that's around that low there. To that top, you got about 23% to that top there, or to the current closing price is at about 12%, which is underperforming Bitcoin, or basically just keeping par with Bitcoin. That's not what you want to see in an altcoin. Now, if you've got a grasp of this criteria and you have laid it across altcoins that you're looking at, that are in your portfolio, let us know in the comments section down below. I've got a pinned comment there. Drop your altcoins. Let's see if we can cover a few of these in upcoming videos. Hit that subscribe, like the content. We looked at Bitcoin getting rejected. We looked at the possibility of a red Q2, or when that next all-time high could come through for BTC, if that red quarter is in play. Altcoins that are leading the charge here. This is what we definitely want to see for our altcoin portfolios. And I'll see you back here tomorrow for another update. Thanks again, guys. Catch you then. Peace out.